Hi, my name is Surendra Raspantha and today I'm going to present about uses related to cash flow statement. The format of this presentation is that I will start with the introduction of topic followed by components of income statement and cash flow statement. Then I shall present my analysis on the cash flow of three public firms which are BHP Limited, Santos Limited and Fantastic Limited. Business prepare various financial statements such as income statements, balance sheet, statement of cash flow, and a statement of change of equity, which give information related to the firm's assets, liability, revenue, expenses, profit, as well as cash flow. The prime motive of any business is to generate profit for its stakeholders, and income statement help to evaluate firm's profitability. Similarly, sufficient cash flow is important for businesses as it enables them to pay liabilities as well as purchases new assets. Information related to profitability and cash flow is also important to determine ongoing concern of the business. Income statement is financial document of a firm that shows its profits and losses by deducting the expenses from the revenue and is also known as the profit and loss statement. It requires least amount of information from other financial statements, thus is prepared first. The first line item to prepare in any income statement is revenue, which is the income generated by the sales of the good or delivery of the services. From revenue, cost of goods sold is deducted to calculate gross profit. Next line items are the operating expenses, which includes marketing and administrative expenses such as salaries, rent, and office expenses. Operating expenses are deducted from the gross profit to find earnings before interest, tax, depreciation, and amortization. Next line item is depreciation and amortization, which is the loss in the value of the assets as they get used up, and these expenses are deducted from EBITDA to get operating profits. The next line items are interest and tax expenses. Tax is calculated on the value of operating profit minus interest expense. Deduction of all these expenses leads to the final line item in income statement, the net profit, which is the amount that flows into the balance sheets as retained earnings after the deduction of payment related to dividends to the shareholders. Well, statement of cash flow mainly has three components: cash flow from operating activities, cash flow from investment activities, cash flow from financial activities. Right? Each component contains line items related to the cash flow and cash outflow and ends with the net cash flow. Cash flow from operating activities can be calculated by using direct or indirect method. In direct method, only business accounts such as cash payment and the cash receipts are considered. Amounts receivable and payable are not considered as they are recorded in accrual basis. Contrarily, indirect method uses both accounts, receivable and payable. Investment activities refer to the purchase or the sales of long and short-term assets such as new equipment, buildings, etc. While financing include borrowing from financial institution, repayment of debt, issuing and buying back shares, as well as payment of the dividends. Net cash flow of each activity is added to find net cash flow for the financial year, to which cash at the beginning is added to find ending cash and cash equivalent. Well, BSP Limited is one of the world's largest resource company with principal business in mineral and petroleum exploration and production. Analysis of the statement of cash flow of BSP Limited reveals that the company had positive cash flow of $21.7 million in 2017. Likewise, $23.4 billion in 2018, but negative cash flow of $50 million in 2019. The main sources of cash inflow in all the years were profit before tax, adjustment for amortization and depreciation, receivables and inventories. Proceeds from disinvestment of US subsidiaries was enough the major source of cash flow in 2019. The major sources of cash outflow were interest and tax payment, purchase of fixed assets, exploration expenses, and the repayment of debts. Expenses related to share buy and back scheme was among the biggest cause of the cash outflow in the year 2019. The company generated enough cash flow to cover all of its capital expenditures and dividend payment in 2017 and 2018. However, slightly missed the margin in 2019. In the year 2019, it used debt instrument for capital expenditures. The excess cash was invested to purchase fixed assets for new exploration, repayment of interest-bearing liabilities, as well to buy some back shares. Next company considered for analysis is Santos Ltd, which is the pioneer supplier of the natural gas in Australia. The analysis of Santos Ltd cash flow statement suggests that the company had positive cash flow from operating activities in all the financial year 2000 from 2017 to 2019. However, the total net cash flow was negative in all the years from 2017 to 2019 except 2018, in which it had a net inflow of the cash of $1995 million in 2017, and the company had a net outflow of the cash outstanding at $804 million, while in 2019 it was $238 million. The major sources of the cash inflow were the receipts from the customers and drawdown borrowings. The cash was mainly spent on the payment made to the suppliers and staffs, pipeline staffs, interest expenses, royalties and tax expenses, as well as on the new exploration and acquisition of the subsidiaries. Large sum of the cash was also spent to pay the firm's debt in the financial year 2019. The capital expenditure has gradually increased from $682 million in 2017 to $759 million in 2018, and further to $1,016 million in 2019, and was mostly funded through the borrowing. Significant dividend payment was only made in 2009. The last firm under the study is the Fantastic Limited, which is a leading wholesaler and the distributor of branded lifestyle merchandise in Australia. Fantastic Limited cash flow statement discloses that the company has been very efficient in cash generation in all financial years from 2017 to 2019. Cash outflow has been significantly higher than cash inflow, except in the year 2018, in which the company had a menial positive cash flow of $98 million. The cash generation from operating activities has always remained negative. The major source of cash inflow are the receipts from the customers as well as the proceeds from borrowing. In the year 2018 and 2019, the large cash inflow can be also attributed to the issue of company's share to general public. The company spent cash mostly in the payment made to the suppliers as well as salaries and wages to the employees. Significant amount of cash was also spent as the interest payment and on the acquisition of fixed assets as well as intangible assets. The firm has funded most of the capital expenditures through borrowing and had significant debt. Due to the poor cash flow, the company has not distributed any dividend yet. Finally, I would like to assert again that the financial statement help to get profitability as well as the liquidity and solvency of a firm. These statements support to evaluate the firm's revenue, expense, assets, liability, and cash flow and help investors to decide the suitability of the firm for any investment as well as creditors to decide whether or not to lend money to the firm. With this all, I would like to end my presentation. Thank you.